In other words, it's going to allow all AI systems to speak to each other. Think of people who are paraplegic and have a lot of disabilities that actually can now use their brain to do physical commands. We're currently earning about 50,000 US a month, and we believe it's going to go into the hundreds of thousands of dollars. Many of the companies that we have gotten behind are in their commercialization phase this year.
Well, welcome, ladies and gentlemen, as we explore the future with 3D Capital, an undervalued asset manager with holdings in AI, blockchain, biotech, junior resources, and more. Joining to discuss, Sheldon, the CEO. Welcome, sir.
Thank you. Great to be here today.
Yeah, such a pleasure to get you on. So I really want to dive into this because this is such a fascinating story. But for newer audiences, you want to just offer kind of that brief elevator pitch, maybe highlight some of the portfolio companies because you span across such a variety of different sectors.
Sure. So this is a new thing for us to do here at 3D. We've been stealth for many years, so it's sort of very timely that a lot of the companies that we got behind, and we're basically venture capital investors, but in a non-venture capital structured way. We're a public company. I did this before with Pine Tree Capital. The shares went from 12 cents to $26, and it was liquid for everybody. You're not trapped in a LP GP structure, and I always liked it for people that decide to create their own liquidity points, whether in or out, have that flexibility. So that's kind of just the unique structure that is important just to say. So yeah, we've been stealth for 7 years, and now many of the companies that we have gotten behind are in their commercialization phase this year. So that's the reason why I've decided to talk about these companies and position them in people's minds. So yeah, I can easily just highlight a few. Our portfolio is basically 80% in technology and biotech, 20% in mining, an area where I've had a lot of historical experience and done that quite well. And the mining sector is now coming into its own new cycle. So we have some very, very robust companies that are going to come public. The key companies that probably to perhaps feature in this brief conversation would be around AI. We've got a number of businesses in this sector. We've been doing it for 7 years, so we're not Johnny come lately as new idea, new application. These are very, very deep technology stacks that I think are going to become very, very substantial companies. The first two I'll talk about are based on a protocol called TOTA. And TOTA is a blockchain-like protocol that does not have the limitations of blockchain, which is primarily scalability and cost. So this protocol can actually have unlimited transactions per second and have cost bases of fractions of a penny. So in the commercial world today, in e-commerce, online transactions and so forth, it can cost you 25 cents to $1 to process a transaction on KYC verification, counterparty processing fees, and so forth. We bypass all of that. So the first, what I'll call it killer app that I'll talk about is a company called TOTA-Q. And TOTA-Q is basically launching micropayments. And micropayments means that you can now do transactions for as low as a penny and everybody makes money. So if you think of all the business models on planet Earth, many content providers require you to do subscription-based models. And 6 billion out of the 8 billion people on planet Earth cannot afford to do a subscription base. In other words, I'm going to pay you $19.99 a month, $9.99 a month, $5.99 a month. It doesn't matter. Those people want to be user-based. They might have limited capital, and they want to consume in fractionalized units. Someone wants to watch a video game or play a video game for 5 minutes. Is that possible? Not previously. Someone wants to go to some content that Netflix has from 10 years ago and accesses it, they can't. They have to do a subscription. Now you can basically unitize all these purchases and put them into increments of a penny, 5 cents, 20 cents, so forth, depending on the vendor. Musicians want to maybe have people pay a penny every time they want to listen to their song. It can be done. So this company, TotaQ, is launching in the next 60 days with Google and two big Canadian banks, CIBC and RBC, who are going to help process the transactions. And we're finding that the response has just been overwhelming, because this is from two sides of the equation. From the buyer of the content, they can now buy only what they want to use and in whatever increment they want to use it at. And then for the seller of the content, they can actually process the payment side and make money. So we believe that this is a killer app. It's happening on our YouTube channel. The founder and CEO talked about it, so I encourage anybody to go there. The second killer app that comes off this same platform of Tota is a company called Hypercycle. And Hypercycle is a partnership between Tota, the protocol, and Singularity, which is basically an AI-driven engine run by a fellow by the name of Ben Gertzel, who's been in the AI world for 30 years. And he wants to get to AGI, which is kind of this global brain nirvana. And he believes he can get there, but he could not get there based on what he was building on at the time, which was Cardano, because Cardano is a blockchain and it just wasn't scalable. Found Tota, partnered with Tota 18 months ago, and now created a new company called Hypercycle. And what does Hypercycle do? It is facilitating the internet of AI. In other words, it's going to allow all AI systems to speak to each other. And anybody who's looked at the criticisms of AI, it's all around the fact that it's centralized and someone could have the power to manipulate and control others. This Hypercycle and TotaQ, but Hypercycle is totally decentralized, so no one can control the network. So the ecosystem of the internet of AI is that Hypercycle facilitates, and we believe in the future, 99.9% of all future commands, transactions, algorithms are going to be done machine to machine. And this facilitates that in a high-speed network where the costs are fractions of a penny and the speed is unlimited. In addition, anybody who enters into this ecosystem can help save substantially on compute power. And the AI world's growing 400% a year, which is phenomenal. No let up in sight. The headwind there is compute power and the costs. And this solves that problem. And anybody who's involved in the ecosystem benefits substantially and very robustly. And ThreeD is deeply involved in both of these initiatives. In TotaQ, we own 280 million Tota notes. Every time you do a microtransaction, you got to redeem a note. So that's going to be cash flow for us. And then on Hypercycle, we're currently earning about 50,000 US a month, and we believe it's going to go into the hundreds of thousands of dollars because, again, we own pieces of that ecosystem. And it's a whole tech stack, plus it involves software nodes and tokens. So again, I'm just throwing things out there. We also have a YouTube interview with the founder. Another company that we believe is complementary to TotaQ, it's in our office, I run a bit of an accelerator, is a company that's developed an AI engine for AI software, which is embedded, say, in a wearable watch where you can take your own blood pressure, and it's going to be FDA approved. So it'll be the first FDA approved device that when you take your blood pressure, it's as accurate as you use a blood pressure machine. So how does that company charge? Well, originally they were going to do a subscription model, and that's not easy to do. There's a lot of pushback. Now they partnered. We helped facilitate the partnership with TotaQ on micropayments. So every time you decide you want to take your blood pressure, and everybody has variable reasons why they may want to do that, but it's a big, big problem in the world. obviously around hypertension, precursor for heart attacks, and so forth, it's going to cost you a penny. So never before could a company process a transaction for a penny and make money. It would cost too much. And now the user is going, I don't want to pay $5.99 for this device or $10.99 a month, even though I'd like it. I just want to pay every time I need my blood pressure. So now you have a company that's developing a business model that previously never would happen, and we help facilitate that bridge. Another AI company we have is developing or has developed, again, time series data software, which is it's AI technology for managing smart cities in sewage and water. And most municipalities basically are broke. Populations are expanding. They don't have the money to expand, so they have to use their current infrastructure in the most efficient manner. And this company called Infinity AI does that. And again, we have an interview on YouTube, but they've been winning municipality and city after city. They have monthly recurring revenue, so it's the highest form of profitable revenue. The company sees in the very near future that it's going to be profitable, and it's growing substantially. We have companies in cybersecurity. We have another very interesting company that I'll be the last one because we have 70 companies, so there's a lot to talk about. But we just posted to our YouTube site is a company that, again, AI, been working on this technology for 13 years. It's launching this summer. And basically, it's a technology that goes in a headset, and it's any headset. So it's not, again, it's device agnostic. They've developed the software that goes into that headset that basically tells you, or it tells you many things, but it measures your electronic magnetic brain waves. So it actually can measure what you're thinking. If you want to change a music channel, you think about it, you can do it. You can change a PowerPoint. Think of people who are paraplegic and have a lot of disabilities that actually can now use their brain to do physical commands. But the first key thing that they're focusing on, no pun intended, is that if you are wearing the headset and you lose focus, like if I'm suddenly talking about this, but it reminded me of something about that, and then your mind tends to go there, the headset, through the software, a company called Neurable, tells you refocus, get back on subject. So in a way, it slows down cognitive decline. We believe this is going to be a very, very big situation. We believe that all headset manufacturers are going to want this embedded into their hardware because everybody cares about their brain, and the brain is really the new frontier.
Yeah.
So this is just a sampling of some of our companies that we're very excited about, that we've been involved in for a long time, but they're commercializing this year.
Yeah, I definitely appreciate the insights. You almost kind of remind me of the Canadian version of ARK Invest, but I like the fact that a lot of your companies have synergies that you guys can kind of work in between as well. And a lot of it is also focused toward infrastructure, which I think, is an industry that's evolving relatively quickly to the technology front. So yeah, this is just a fascinating story that I'm looking forward to continue, but the valuation aspect is also fascinating. I mean, if you just run through the balance sheet, I mean, we're discussing the 43 million in assets. You've got just over $1 million in current liabilities, nothing too crazy coming into the last quarter of 2023. But do you want to just kind of discuss the market cap value here? I mean, you're trading for around 21 million bucks. I mean, your net asset, your unaudited net asset value is around 88 cents, which is like half as much, right? I mean, do you guys kind of see yourselves as a value setup as like this? I mean, if you're looking for kind of a risk on investment, I don't think it gets much more interesting than what you guys are doing, because you get all this expertise across so many different sectors, which is probably going to lead to hopefully a higher rate of return, even if one or two of those don't tend to work out. Do you want to just discuss a little bit of the value side of it? I think it's interesting.
Sure. So because we are involved in, yes, risk return kind of companies, our auditors have made us basically value things on an extremely conservative basis. Because if you don't have visibility to revenue, to profitability, the metrics that on disclosure requirement for accounting purposes are pretty onerous. So our NAV, I am sure, is understated if these companies become commercial, and they're becoming commercial. So the value proposition, I would say, for investors is, as a retail investor, and we also have institutional investors that care about investing or participating in disruptive or higher risk areas and want to look at it where there's a portfolio. We have 70 companies, so you're diversified, where the entry point for us is at the beginning of these companies' lives, so the valuations are very low. We get involved in actively managing and building accretive value, so we're making them more valuable. And so for the average person that doesn't know which company to buy, doesn't get access to some of these great ideas because it's not available generally for retail investors, and many of our companies are international, they're not from Canada, then you get to kind of have a diversified approach where you're getting exposure to the most exciting ideas in areas like AI, that have been due diligence by a team that has a track record, and you can get extraordinary returns, and you're buying it at a discount to its current value. So I feel that all the metrics are there. We've also been buying back our own shares. We probably bought back about 2% of the outstanding shares in the last 6 weeks. So we feel that the shares are substantially undervalued, and that the upside now, again, been stealth for 7 years, because these companies are becoming commercial. We have a number of companies that are IPOing this year. So we have a lot of liquidity events. We feel that the momentum is now going to begin from a commercial standpoint. So I'm not here arm waving and saying we're developing this technology that's going to take over the world. No, in all these cases, the technology has been developed. It's now out there for commercialization. In other words, revenue, cash flow, real businesses, and that's the catalytic moment that we're in right now.
Yeah, appreciate the insights. You almost kind of remind me of like the Warren Buffett of tech here in Canada, because I got to ask you, roll back for us just a little bit here. I mean, you've got over 30 years of experience in investing in companies, seeing these companies go through billion-dollar acquisitions. How do you kind of roll into this position being so forward-looking? I mean, this is usually as somebody gets older, they want more conservative investments. They're not usually as tech-heavy or, so forward-looking in the stocks that they're picking and the investing they're getting involved with. What in your history kind of led you down this path?
Well, it's a good question. Maybe I just have the risk gene, but I have felt that. I remember when I was in the business and I was an oil and gas analyst, and we had a portfolio at this big life insurance company, and they owned a lot of shares in a company called Campo. And Campo was an Ottawa real estate developer, and it was totally cash flow producing, conservative, and so forth. And then it was growing, and they went out and they did an acquisition about Federated Department Stores in America. And the stock went to $30, and everybody was investing in it because they felt really comfortable at the asset value, the cash flow, and so forth. Well, Campo took on too much debt. They got into trouble. A year later, they're in bankruptcy. So the most conservative company, which is where you put the most amount of your money, you don't expect is going to be a write-off. And that was, and I could give other examples that so I look at it like this. If I invest in a company and my entry cost is 5 cents or 10 cents, that typically is my downside. And so I can quantify my downside, but through sweat equity of helping. So I've raised over 30 billion for my companies. I have a lot of scars on my back. If I can impart my knowledge to these 5-10 cent companies, and they have smart people with very disruptive technologies, and I can help them, the next thing you know, their shares can be worth $1, $2, or $3. But my downside was really only a nickel or a dime. So in some ways, I find it less risky than buying NVIDIA, for example. But the trade-off there is liquidity. Big companies are liquid, small companies are not. So that is the challenge of how can you bridge to commerciality, because that's when liquidity starts, when companies report sales growth, earnings growth, contracts. But again, I view it as the downside I can quantify, and it's not the type of thing that is just going to blow a hole through your life. So, that's kind of a bit of my rationale. And, when you have a track record that, there's always something that's going on. Typically, something's always liquid in our portfolio. And basically, we've raised no money in 5 years. So we've been able to build companies, exit some, get enough cash, pay overhead, pay for new investments, and buy some of our shares back. So we've been able to juggle that world, I think, reasonably well. And now, with so many companies in our portfolio that are bridging over to becoming really real going concerns, this is where you can get parabolic returns. And that's really what I like to do and to deliver to other people. That gives me my greatest joy.
On that note, I'll pass it off to the viewers. We'd love to know what you think, and consider subscribing, because if the news and catalyst hit the wire, we're going to bring it to you here as well. But on that note, as always, we look forward to catching you in the next one.